You are looking at a daily chart of the Dow Jones Industrial Average. I'm getting my Dow Jones 40,000 cap and shirts. Oh my swag. It's at 39,781. It was up 269 points today, or 0.68%. And and it made a new high there of 39,889. Normally I don't talk about the Dow, but despite the AI boom revolution, and this Dow Jones is what's leading this market higher. It's kind of a strange phenomenon. The Dow 30 stocks, with Apple being down like 7 points today, still ripping higher. So the Dow Jones Industrial Average is the leading index at this point, although I would say don't sleep on the AI stocks, and I'll go to SPY, I guess, next, if this thing will cooperate. This is the S&P ETF. I could go to the S&P, what the heck. Just go to the index. And then this one made a new high today as well. It was up 0.32% and at 5,241. The SPY just rallying higher, pulling back to the 21, finding support, just like the Nasdaq has been. And this is the index that I pay attention to most, because this is where most of the stocks that I trade, are located. So anyway, this index was up only 32 points today, 0.2%, closed at 16,402, made a new high, as you can see. But there's something about these morning gaps higher I do not like. I see a lot of people chasing the early morning action, and then it sells off, and then they're underwater on their latest buys. I much prefer days like Tuesday, where it opens lower, stabilizes, then trades higher into the close. But like the Rolling Stone saying, you can't always get what you want. But the main point is don't chase those early morning gaps, especially on Monday, which it did last Monday. This is Tuesday. If I go to a 10-minute chart, you can see Monday the gap higher and sold off, and then Tuesday the gap lower, then bought up, and then Wednesday caution ahead of Powell. Since Powell spoke, it's been rallying. Yeah, I know it gapped higher and closed lower, but it's still rallying and making new highs. It's just beware of making the new trades and trying to enter into stocks when it's gapping higher like that. Although I've done it with Nvidia, and since I'm going to go to the stocks, I might as well start with Nvidia, because Nvidia on January, I want to say 9th, it ripped this day right here, the 8th, ripped right through its buy point. First 5 minutes of the session, I had to buy it as it broke through that long period of consolidation. So sometimes you do, sometimes you don't. There's nothing perfect in the stock market. It's just a lot of times when you chase early morning gaps higher, they tend to sell off and you end up underwater, and you feel bad. Nvidia up today, $10 or 1%. It was going higher. I like this little pinching action in here, this little flag bull wedge pattern, but it just can't break higher. It's really having trouble with that 900 number, and it just keeps pulling back towards it. So once it breaks above here, I think it can take out that 974, but it's going to take some time. Eventually it will do it. It's had a lot of upgrades this week since the keynote from Jensen Huang in San Jose on Monday. Broadcom, or AVGO, this is a pretty similar pattern. What we've seen here recently is stocks pulling back and then blasting higher. And it's similar to, the Nasdaq, what the Nasdaq did. So Broadcom's a little more of an extreme case, but Nasdaq did the same thing. It made a high on that Friday and then pulled back to its moving average, and now it's blasted higher. Well, Broadcom's doing the same thing. It's just a little more extreme. Sold off after its earnings and now blasting higher. It had an upgrade from Barclays yesterday, up 72 points today, or 5.64%. AMD, another one of the, I guess if you call Nvidia the king of AI chips, AMD would be the queen, and then Broadcom would be your prince. Anyway, this thing made a new high on that Friday of 227, and then reversed lower. And that was March 8th, and it just has not recovered since. but I suspect it'll do something like a Broadcom, probably not as powerful, but it's going to bounce. I would think it's going to bounce off this moving average here and make another run towards 200. It's just kind of squatting here. I mean, it's not the end of the world if it just stays along here for a few sessions and just rides the 50. But eventually, I think you're going to see a push higher in this stock. I think so. I mean, you never know, but I think it'll find support and trade higher. ARM is another one that we have on our ready list. And this thing's just not doing a whole lot. I have a buy point here at 132. It is pinching in here kind of nicely, big flag. If I look at the weekly, I should go to the weekly here. You can see this, the big pole, and then there's your flag. So you got the high tight flag, not very tight, but like I said, the pattern doesn't mean anything unless the stock trades higher. And ARM's having a little bit of difficulty there, but it's still being supported at the 21. So that one looks fine. And SMCI is the last one of these AI stocks I'm going to talk about today. This one I sold yesterday because I don't know, it wasn't acting right. A lot of shenanigans with Goldman Sachs and the S&P, and it was trading below the 21. Looked like it was heading towards the 50, but I think I showed you this the other day. If you change the moving average to the 34, a lot of times when stocks get in that no man's land between the 21 and the 50, that they get support at the 34 and then bounce higher, and that's what SMCI did. So I had to buy it back at higher prices, and when I do that, yeah, I screw up. Everybody screws up. I hate selling stocks that I really like, and I really like this stock, but I just didn't feel good about it. So I closed a trade. It was a winning trade, and now I have a new trade, and I'm up on this trade, so I just consider it a new trade in the book. So, and every time I buy back, when I make a mistake like that and sell and it rips higher, I buy back more. So if I had 100 shares and I made the mistake, then I'll buy like 105, whatever, just to punish me for making a mistake. Anyway, yeah, it's traded higher. I mean, Goldman Sachs is just, I don't trust them. I don't trust they'll do anything for money. People do anything for money. But anyway, I just wanted to show you that it's down 9% this week. It had its worst 5-day session in 4 years here, 5 days in a row as it went in. Welcome to the S&P. We're going to sell you off from, well, I don't know, it was 1170 down to, 8 something. Let me get this actual pricing here. Just sold off from this, was that Thursday, 1195. Friday was 1135, and into the S&P, and the fund managers for the S&P had to pay $1,100 for it, and then Goldman's picking it up here for 860 on Wednesday, and now it just pushes higher. It's probably going to resume its uptrend again. But there really is no sell sign. I mean, technically you shouldn't sell until it slices its 50, but I don't know. I just wanted to take profits, and so I have a new trade. That's all. It doesn't matter what I do. SMCI looks fine. And that's the bottom line. Okay, so I'm going to go to the energy and the data center stocks. Vertiv. It was crowned by Jensen Huang. It was just mentioned by Jensen at the when the king puts the crown on your head, the stock responds. This one is being supported here. To me, it's starting to get extended though, and above this, I guess you could call this like an upper trend line, right? Yeah, broke it Monday during the conference. Tuesday pulled back, and then Wednesday, Thursday is just gapping higher. So once again, this is one of those stocks that I was going to show you that if you're getting in there and buying, as it rips up, oh my God, we're going higher. It's going up 82, 83, 84, and then all of a sudden, whoop, I'm going to buy it here. Nope. See you later. They're just going to pull the rug on you. Yeah, still it was up 5% today, but that's what happens when you chase stuff. Don't be doing that. I learned the hard way many, many times. I'm just going to go through all these here. VST, energy stocks. These data centers are going to use a lot of power. Vistra just keeps going higher and higher. This is a utility stock with what pays a little bit of a yield and a 2.6 up down volume ratio. That's a lot of buying power, folks. Eaton, one of these bigger companies, once again just trending higher, making new highs. MOD, Modine, I mean, what can you say? I mean, you wonder, here's what I'm talking about here. We're seeing this pattern a lot though, is where it comes down, it looks like it's gonna sell off, go to the 50 and it just reverses and rips higher. I showed you Vertiv, NVT is another one. There's not much to say here. They're just, cruising their moving averages and just surfing. They're hanging 10. All these power. This is of all of them. This is the one I really like. You can't argue with any of them, but this one again today up, nearly $7. Just powering higher. Excuse the pun. All right, I'm going to go to the drug stocks because we got news today from Novo Nordisk. Medicare said they will not. This is in the afternoon. This afternoon, it didn't really respond. I don't know if the machines were trading or what, but Medicare, first of all, the Congressional Budget Office said that if Medicare covered weight loss and obesity drugs, it's going to cost more money. Well, duh. You don't need an agency to tell you that. Anything you cover is going to cost them more money. But Medicare did say they will cover Wegovy for cardiovascular patients. To me, that's a huge deal. You can see it's finally responding up 2% after hours. It just pulled back and closed this gap here. Technically speaking, it closed this gap here today at 128.77. If I can zoom in, you can see that a little better. It's a gappy stock because it's an ADR. Gapped here and then filled the gap. That 128.77 was the high. Then it gapped again, and now it closed today. The low is 127.11. Somebody was saying it did it yesterday, but it did not because that's 128.83, which to me is not closing a gap at 77. It's 6 cents, but still, 6 cents is 6 cents. A big deal. To me, this is a big deal for Novo. It gives them a leg up. Medicare is going to cover their drug, Wegovy, for cardiovascular patients. And it's the only weight loss, I shouldn't call it weight loss. It's the only GLP-1 drug that's approved for cardiovascular. Other companies like Lilly have a long way to go just to do their studies. These trials last years. So it's a big deal for Novo, but still, they can't manufacture enough drugs. It's just, still have the same problem. They have all this demand and not enough supply. So we really do need more companies to be approved for this weight loss and weight loss drugs. And I'm thinking Viking would be one of them. And they have a readout coming pretty soon. This one just, has this waterfall or avalanche, or, we can call it a bull wedge type of action where it just pulls back to the 21, finds support, trades higher. They're going to have a readout, like I say, pretty soon. So this is the type of stock that'll move with news. It's not going to do much until, they come out with this data and it's good data. And I think it will be. But you could see this one kind of like this high tight flag pattern here was up 121% in a day. Okay, so there's your flag. And like I said, it doesn't, the flag pattern doesn't mean anything. If it's bad data, that thing's going to come back to $20. If it's good, it's probably going to go above 100. So that's why with speculative biotech stocks, you can't put a lot into them. You can't go big size because you can get crushed. You can, but I wouldn't advise it because if you lose, you're going to be hurt and crying in your beer. Okay, since I'm on these stocks, I got to go to Lilly. I think it was the same thing with Lilly today. Yeah, just being supported to 21. It sold off in the morning. This is what I like. Yeah, it came down in the morning, kind of showed you its true range, right? The day. This is what I like with stocks. It opens up, 774, then shows you the low there at 758, kind of retests that area, and then gets back up to its early morning bar there of 774. Then it traded above it. So if you were day trading, you would have bought at 774, and it ramped all the way up to 780, and then just pulled back and was down for the day. But that's why I like gaps lower at the open. You can kind of find their range a little bit. Okay, anyway, IMVT was up today on a when your competition fails, it's good. It's good for these stocks. I forget that TMLR was the name of this TRML, I believe. Yeah, Tourmaline, they had a bad negative trial, so they were down 35%. They were in the outhouse while IMVT was in the penthouse because of bad news from another company. So it didn't do anything right. It's just its competition failed. So it was up higher. ARGX, I think that one was doing pretty well. Yeah, up 11% on that news as well. So its competition had a failed trial, and these other two went higher. That's the way it goes in biotech land. All right, I'm going to move on. I've got to go to the software names because they're kind of struggling. This Palantir is an AI stock, and this one made that high at 2750, pulled back, undercut to 21. This is a lot like the Nasdaq here, where it just pulls back, and now it's starting to rally. But today, just flat as a pancake. Datadog can't get out of its own way here under the 50. I was expecting to see it rally through today, but it just got rejected there. I was going to say that's not a good sign, but eventually I believe that'll, power through there. It's just short term, it's acting as resistance. The other one is Snow, which just trying to bottom, it made this bottom here near 150, 151 Tuesday, rallied higher, and today just gave some back. So it's still, above its lows, but oh well, what are you going to do? A couple of them that I have on my ready list that are performing well, and this is like whistling past a graveyard. Like a lot of the software names are selling off, and these are doing okay. I like this pullback, below the 21, and now I'm bouncing higher. I think I had a 225 as the buy point there. So that one's doing okay. Appfolio, I got to stop there. One thing I don't like about this stock is the volume. I know it's a $230 stock, but it still only trades 260,000 shares a day. So that's not a real liquid name. And then Duolingo, this one's doing a little better. This one has a cup with handle. I had the buy point at 225, right around the 21 there. So it's acted well this week. But I still think this is actionable. Yeah, it's up almost 9% this week. I do as standard buy point here. This is paint by numbers kind of action where was it 241.86? You can see on the weekly here the right side of the base went up abruptly, right? Usually when it does that, it takes a little longer to form a handle. But we're just going to keep watching Duolingo. I mean, if you got it at 225, you're gold. But if you're looking to buy here at 241, just gonna have to be patient. I think it's going to kind of handle out back to the moving averages again. But the expectations are broken often. Okay, that's it for the software names. I'm going to move on to an area that I very rarely cover, and these are the finance investment management group. And this is Aries, and this is I like stocks that have shown prior uptrends, prior uptrends, consolidate, big uptrend here. Now it's just consolidating within a base. And what it did is it traded tight within the base, and now it's starting to move higher. So I like this one. I would put it on my ready list for Friday, but I'm not going to because it's Friday and I got enough good stuff on the plate there. But if you're interested in one of these finance management, this one looks pretty darn good to me. Another one that I like is, I'll go to Owl. Hoot hoot. The owls are hooting. This one broke out of a base. So when you have a stock in the group that's breaking out, that always bodes well. You don't want to be the lone wolf. You want some partners. And this one's had a big uptrend and now had this little flat base and now breaking higher. Did I have that on my ready list? No, because I was sleeping at the wheel. But congrats to the longs there. That's a nice move of nearly 4 points today, 4%. And APO. Another one, I did have this on the ready list, and I like this action here. Obviously, you got to look to the left. Does it have a prior uptrend? Yes. This has shown the ability to move big time. Then it consolidates, then it moved higher, and now it pulled back to moving average and trading tight here. So I put this on the ready list yesterday, I believe, or the day before, and it's really responded. Yeah, up with volume. I like that. Yeah, breaking away from this area. What was the high today on this one? It seemed like it was a lot higher. 116. Okay, so maybe foreshadowing of things to come. Anyway, that's it for the finance investment. I'm not going to do the insurance today or the copper or the mining or anything like that. I'm going to go to my favorite, retail, the ELF. the ELF, kind of like the Nasdaq, pull back to the 21, now trending higher. I got to show you the 5 minute range today, because this is one that I'm talking about, right? Like if you chase the open here, I'm going to buy alpha, it's ripping up, it's at 204, and then it shows you the range of the session, right? It comes back to what, 196, so it's got like an $8 range here. Then it comes back to 203, 204 area, 204, 204. So you think, okay, it's just going to trade at 204 all day, right? And then it breaks above 204 by a buck, and it starts trending higher and higher and higher. And that's where you'd put your trade on if you're a day trader. I mean, if, I just hold the thing long, but once it gets above the, this 204, the opening bars there, it traded up to what, 209 today? Yeah. So, and closed at 207. So good day for ELF. But just showing you that you could just wait, for the range, right? Don't jump in right away. You're lucky, bull market, you can get lucky. You buy the open, like, uh-oh, I'm underwater. Uh-oh. Okay, good. Back to even, right? Oh man. My stupid buy's paying off for me, right? That's what bull markets do. You can make mistakes and get away with it. But I do not like buying these gaps higher at the open, especially. It's just setting you up for failure, because they open them up and then they sell them off. But anyway, I digress. ELF looks fine. It undercut the 21, and now it's rallying. And we know ELF is growing like weed. Somebody said, when you're evaluating stocks, you with a growth stock like ELF, you're evaluating growth. It's shown 76, 76, 85, the triple digit earnings growth. So as long as it grows like that, I know this stock is expensive. It's got 11 billion market cap, with a billion in sales. So yeah, I know it's expensive, but if it keeps growing like this, it's going to grow into that valuation. If you're evaluating, the dividend stocks or value stocks, or like Bristol Myers or General Mills or Target, yeah, you're going to use the PE ratios, but you don't do that with growth stocks. You use growth to evaluate growth stocks, and you can use your PE for your, dividend payer value stocks. Anyway, I'm going to get off my soapbox here. Deckers went into the S&P 500, sold off a little bit. Certainly not like SMCI, but it came down to the 21 and bounced sharply. $37 today, 4%. So welcome to the S&P, Deckers. Nike reported tonight, and Deckers up a little bit, but I know Deckers is taking market share from Nike. ANF, Abercrombie and Fitch. This is, I got to show you a lesson in stupidity here. I've been watching this stock here since last spring, fall, I guess, since 55. Had this little base here at 57, and then it started ramping higher. So I thought, okay, I'm going to wait till it pulls back to the 50 and I buy it. And I waited and I waited, and this is where patience and discipline can work against you. Where I should have just bought this thing here at 50 or 60 or 70. Instead, I waited and I waited and I waited. By the time I bought on the pullback, it was 120 bucks. So it was like a two bagger that I missed out on because I was patient and showing discipline. So, like I said, sometimes that stuff works against you, having patience and discipline. Sometimes you just jump right in. And if you got a stop loss at 3 or 4 or 5%, then you're not going to get hurt too bad. But that's just, a lesson for me that, if you want a stock, you see it trending, jump in, and if it goes against you, then you can get out. But if you want it, and I really wanted this stock, and I was a dummy, and I waited and I bought it 120. So I'm still happy with it. And I still think it will trade higher. Super cheap stock. I mean, it did 1.4 billion in revenue last quarter, a billion. They're doing, nearly 5 billion in revenue, and it's only less than a 7 billion market cap. So this is not an expensive stock at all. And it's showing the growth, 16, 20, 21% sales growth. So the margins are increasing. This is pretty popular with the younger crowd. Anyway, I'm going to get off my Abercrombie and Fitch Hollister horse, and just go to Celsius. This had this big move, and you can see the 44%, and that triggered the 8-week hold rule. I don't want to get into all the rules or anything, but a move like that, you should hold it for 8 weeks, and it's only been a few weeks, so I'm just going to continue to hold it. I think it's going to get to $100 and then have trouble with that 100 number, 99.62 on the last Thursday a week ago. So Anyway, Celsius I just want to show it because and then CROX. This is a Tom Petty stock, will not back down. It just ripped higher yesterday on an upgrade. It was up to 140. And I told my friends that, go take a little bit of profits and buy yourself something nice, some Crocs or something, some shoes. And man, this thing went down today a little bit. And then it just closed higher. I couldn't believe when I looked at the close and we're like, how is this thing higher today? Well, you can see at the close, a high volume close there for Crocs. Traded down at the open, sideways all day, and then at the end, a buyer comes in. So you can't argue with Crocs. I mean, I went to spring training and all the little league kids were wearing Crocs, so still a popular brand. Okay, I'm going to go quickly to the oil and gas stocks. These are just a few. Well, this one I had on my ready list, but it's kind of gonzo. You can't chase that. These are slower movers. This one I still have on my ready list. It's starting to push away from its base, so it's up 3 cents today. These are not going to move like SMCI. DINO, another one. So on my ready list, kind of like it. It really should be showing you the weekly charts on these things because they have been consolidating for a long, long time. FANG, another one that I like, and this one's just trending higher. You can see on the daily, it's just every day, just marching higher. And then the last one is Sting, STNG, which I have on our ready list as well. And you can see why it's just trying to break out of a base here, is up, 1.15% today. So, doing well. When I put a ready list together, I try to, include, a variety of prices, a variety of sectors, because you never really know which sector is going to go to. And rotation into oil and gas, might want to have some exposure there. Rotation into AI, you might want to have exposure there. Software, retail, yada, yada, yada. Anyway, that's it for me today. Thank you for watching, except for I lied in honor of the great Steve Jobs. One more thing, and that is Nike. You saw Decker's up after hours. Nike reported a pretty tepid report. They say they're going to innovate and grow. I think North America, I want to say, was just barely up, but they have a lot of exposure to China, and China's economy is pretty weak. But I guess they guided higher. I don't know. I have to look at the report and read through it, and I'll have more in the morning on these things. But the initial reaction is positive, 3%. That's great for Nike, and good for the. It's a Dow Jones Industrial Average stock. LULU reported, and they did the same thing they always do. They beat, and then they sandbag. So to me, 10%. It's going to get a 10% haircut in the morning. I'm going to bet you dollars to donuts, which a dollar doesn't even buy a donut nowadays. So that shows my boomer age. I bet you dollars to donuts at Lululemon, not down 10% tomorrow. Cooler heads will prevail. And some people will pick this up on a discount here at 430. What is that? The 200? No, 421 is the 200. So yeah, it's going to slice the 50 and it's going to be a no man's land here. I'm thinking that somebody will pick it up there. It'll stay in its base there around 440, so maybe it'll open at 430 and, trade up to 440 or 450, but I doubt if it's down 47 bucks tomorrow. It was a good report. I should get to the report. They did beat, but there's just the guidance. They're always with the guidance, sandbagging, so they can beat the next time. It's just a ongoing cycle with them. FDX, I did not read through the report. I just saw, the headline news. They beat and they had a big, massive buyback program, up 12% though. So we'll take it. Good for the, transports, that's all good. The airlines, I should have done the airline stocks today. They've been up strong. Cruise lines, but I did something else today. So anyway, maybe tomorrow. We're in a bull market. Let your winners run. Don't be a dummy like me and sell SMCI for no darn reason. Yeah, you got to let your winners run. They're going to pull back. You got to embrace pullbacks. I always say that. And then we get a pullback. I choke and sell. But, if you're in something like AMD, this is doing nothing wrong. It's been in a long uptrend. It was a two-bagger, right, from this rally where the rally started. Now it's pulled back to a moving average. It kind of does that from time to time. But, it's something you're probably going to have to be patient with. But that thing's doing nothing wrong. And just be patient. And, there's going to be pullbacks along the way. But the trend is our friend. You got to let your winners run. And we're in this trend here. you get a winning stock, you know, you could make, you could do really well for yourself. Thank you for watching. Don't choke like me and sell SMCI. Anyway, at mcstockcharts.com, we never give up. Thank you for watching.